What's up, everybody? Welcome back to Trades and Gains. And this is the show where we talk about the economy the way it actually is, not the way CNBC explains it to calm your 401k into submission. This week's theme, or today's theme, I should say, everyone is rich, everyone is broke, and AI is somehow both. Because right now, Oracle is drowning in debt, building data centers that might not get funded. Amazon is flirting with OpenAI like it's a Tinder date with a $10 billion cover charge. The Fed is arguing about rate cuts while unemployment quietly creeps higher. And Warner Brothers Discovery just rejected a hostile takeover like it was a spam call. This isn't capitalism anymore. This is a $1 billion musical chairs, and the music is powered by, well, NVIDIA chips. So let's talk about Oracle's AI bet and what's going on with that. Because Larry Ellison is doing what every tech billionaire does eventually, borrowing like it's 2006 and hoping the future pays it back. Oracle planned a $10 billion AI data center in Michigan meant to serve OpenAI, except their biggest partner, Blue Owl Capital, just said, yeah, we're good on that. Translation, this deal looks a little too spicy for our balance sheet. Blue Owl didn't just walk away. They refused to backstop the financing, and suddenly Oracle is left holding a very expensive shovel, with no guarantee anyone's paying for the hole to be filled. Let's put this in perspective, though. Oracle's net debt is already over $100 billion. Analysts think it could hit $290 billion by 2028, and lease obligations exploded from $100 billion to $248 billion in only 3 months. That's not investing in AI. That's AI buy now, pay later. It's basically Klarna for billionaires. And lenders, they're starting to notice. Banks are saying, we'd rather lend to Amazon or Microsoft, companies that don't treat AI like a YOLO options trade. Talk about a kick in the balls, Larry. So let's talk about OpenAI now, the most expensive startup in human history. And why is Oracle building all of this? Well, because of OpenAI. OpenAI is no longer a startup. It's a compute eating god that requires data centers, power grids, custom chips, and apparently every tech giant's balance sheet. This week, we learned Amazon is in talks to invest $10 billion into OpenAI. That's not an investment. That's Amazon saying, we'd like to sit closer to the nuclear reactor, please. Now, why did they do this exactly? Because I'm sure you're all confused. Well, it's because OpenAI is gearing up for a $500 billion valuation, possibly a $1 trillion IPO, and a future where whoever supplies the compute controls the ecosystem. Microsoft, they already have a 27% stake. Oracle is building the infrastructure. Now, Amazon wants in on the party. Mr. Bezos is feeling left out. This isn't competition, it's AI Hunger Games. And, well, OpenAI is the capital. The irony of all this, though, everyone is terrified the AI bubble might pop, yet no one can afford not to fund it. Interesting. Now, this is why Oracle is in the cannery. Here's the uncomfortable truth Wall Street doesn't want to say out loud to anybody. Oracle is the weakest link in the AI supply chain. I've been saying this for months, by the way. Microsoft prints cash, Amazon, they own the cloud, and NVIDIA controls the picks and shovels. Oracle, yeah, they're basically highly leveraged, deeply dependent on OpenAI, like a clingy girlfriend, and building infrastructure before demand is actually proven. If OpenAI ever slows spending, Oracle will be the first to feel it. That's why Blue Owl hesitated, the bond market flinched and clinched its butt cheeks. Oracle stock is down over 40% from its highs. This isn't about AI failing, people. This is about who can survive funding it long enough. Basically, who has the best purse strings. Now, let's zoom out, because all of this is happening while the Fed is doing whatever we're about to talk about. Fed Governor Chris Waller says we should keep cutting rates. The labor market is softening. Translation, the job market isn't collapsing, but it's definitely calling in sick. Unemployment is creeping up, hiring is slowing, and yet inflation hasn't fully died. So the Fed is stuck right now. If they cut too fast, well, they cause an inflation risk. If they hold too long, the labor market cracks. And then there's politics. Waller is literally interviewing with Trump to be Fed chair, while saying The Fed should be closer to neutral. That's not independence, that's rate cuts with a resume attached. Markets heard this and think lower rates equals more liquidity, which equals more AI spending, which equals we're going to YOLO back into tech, which brings us right back to Oracle and OpenAI and debt. It's basically the world's biggest circle jerk. So, congratulations, everybody. We're all just touching each other. Media mergers, same chaos and different industry. And let's not prove that tech is the only one getting kicked in the balls today. Warner Brothers Discovery rejected Paramount's $108 billion hostile bid, calling it illusory. Illusory? I don't know how to say that. That's corporate speak basically for show us the money, not the PowerPoint. Netflix, it's waiting in the wings. Paramount, they're bluffing, and everyone's over leveraged. Different industry, same problem. Too much debt, too many deals, and not enough certainty. So here's the takeaway that nobody wants to tweet today. AI isn't collapsing, it's consolidating. The winners will be companies with cash, companies with scale, companies that can survive a funding freeze. The losers, they're going to be over-levered builders, speculative infrastructure plays, and anyone betting the house on one AI customer. And Oracle is now the market's stress test. So when you hear this is just a temporary pullback, ask yourself, who's funding this? Who's leasing this? And finally, who's left holding the debt when the music stops? Because in AI, the future is bright, but the financing is starting to blink. I'm Max Pitts. This is Trades and Gains. Thank you for coming to today's podcast. Leave your hottest take in the comments. Make sure you like, subscribe, comment, and I will see you guys tomorrow for our next midday update.